Think FHA loans will get you into a new home here in the Bay Area? Think again. I get a lot of questions from first-time home buyers wanting to buy a home using an FHA loan, and I often have to let them down easy. The brutal truth is this: FHA loans, often advertised as a key to affordable home ownership, doesn't work in one of the most competitive and expensive housing markets in the country. So if you're pinning your hopes on one, you could be setting yourself up for failure. Stick with me as I break down why FHA loans are a huge disadvantage here in the Bay and what you can do to improve your chances. Hi, I'm Mac Rogers, real estate broker who's been helping buyers and sellers navigate our housing market for years. And yes, even the ones with FHA loans. If you're thinking of buying a home in the Bay Area, you're in the right place. I've seen it all, from multiple cash buyers competing against each other that blow everyone else out of the water, to frustrated buyers stuck in the cycle of bidding wars. And I can tell you right now, in this market, FHA loans aren't your friend. Let's dive into why. The first reason: the sky-high home prices that we have here in the Bay far exceed the FHA loan limits. I just ran the numbers for 2024, and the average price of a home in the 9 Bay Area counties, this is for all types of houses, $1.1 million. Now, if you were to just look at detached single-family homes, that number jumps all the way up to $1.6 million. Compare that to the FHA loan limits for high-cost counties like San Francisco, Alameda, Contra Costa, San Mateo, Santa Clara. The loan limit for a single-family home is 1.1. You see where the disconnect happens? The loan that you get from FHA is not enough. For counties like Solano, Napa, and Sonoma, these counties are not considered high-cost counties. So the FHA loan limit is $828,000. The average price of a single-family home, if you were looking at those counties last year, $929,000. Again, the loan you get is not enough. So when I meet buyers that tell me, hey, I have 3.5% or 5% down and I qualify for an FHA loan, I feel bad for them. Buyers relying on FHA loans often find themselves priced out of neighborhoods entirely. Okay, the next reason why FHA loans are useless here in the Bay Area: the intense competition from cash buyers and conventional loans. The Bay Area housing market is fiercely competitive. Sellers often receive multiple offers, and we have a lot of cash buyers. It's not uncommon for sellers to receive multiple cash offers for their property. And let me give you cash buyers some advice here. You are not a unicorn. There are always several of you out there. So you can't be thinking that, oh, I'm a cash buyer, I can demand everything. It doesn't work that way. I had a buyer that got upset with me because when they told me to write an offer that was 10% below asking price and also asking for a bunch of repairs, I told them that it wasn't going to be competitive. Their response was, why? We are cash buyers. They didn't like it when I told them that that doesn't make them stand out. Let's go back to our FHA buyer and why it's not competitive compared to cash buyers. Cash buyer is generally considered more attractive to sellers, especially in competitive markets like ours, for the following reasons. Number one, there's a certainty when it comes to closing. Cash buyers have no financing contingency. They don't rely on a mortgage approval. With an FHA offer, the lender could deny the loan at the last minute due to a change in the buyer's financial situation or the property failing to meet the lender's standards. Cash offer eliminates this risk entirely. So you can see how this lowers the risk for sellers. Sellers know there's almost no chance of a deal will fall through with a cash buyer, giving them peace of mind. Second reason: faster closing timeline. Since there's no loan processing delays. Financing typically takes 30 to 45 days to close due to underwriting, appraisals, and lender approvals. Cash transactions can close in as little as a week or two because they skip these steps. No matter what you say, everyone values speed, and that is true of home sellers. A quick closing is especially appealing to sellers who are relocating, dealing with financial pressures, or have already purchased another property. Next, reason number 3. Again, since there are no financing involved, there's no appraisal requirement either. Now, I've had cash buyers that had wanted to appraise the property even though the transaction wasn't contingent on it. They just wanted to know the value of what they're buying. But that's a whole different topic. You see, most lenders require an appraisal to confirm the home's value matches with the loan amount. If the appraisal comes in low, the buyer has to renegotiate or make up the difference, which can derail the deal. Cash buyers don't need an appraisal, eliminating this hurdle. Without an appraisal, sellers avoid delays or price renegotiations. Number 4, all cash means fewer contingencies. I've already mentioned 2 of these contingencies. Cash buyers often waive contingencies like financing and appraisal, and sometimes even inspection, making their offers cleaner and more appealing, which means less complexity. With fewer or no contingencies at all, this means fewer opportunities for the deal to fall apart, which sellers greatly prefer. Number 5, you have a competitive advantage in bidding wars. Although I've given you already a caveat to this earlier, however, still in a bidding war, sellers are more likely to choose a cash offer, even if it's slightly lower than finance offers, because it's simpler and more reliable. Simply put, there are fewer strings attached. Number 6, this doesn't happen often, but sometimes there are savings for sellers by way of reduced closing costs. Cash deals may result in slightly lower closing costs for sellers. Without a lender involved, fees like mortgage origination and lender's title insurance aren't necessary. Also, cash buyers are less likely to ask for concessions such as credit for closing costs or making repairs. Number 7, a cash buyer gives more flexibility to the seller. Cash buyers can often offer flexibility, such as allowing the seller the free rent back of the property after closing or adjusting the closing date to fit the seller's timeline. You're not at the mercy of your lender's timeline. And finally, number 8, there's a perception of wealth and stability. A cash buyer demonstrates they have the means to purchase outright, which can make them seem more financially stable and trustworthy. With home prices frequently exceeding $1 million, sellers prefer the certainty of cash over the uncertainty of finance offers, especially when appraisals might not match the purchase price. Here's an example. Let's say we have a seller that receives 2 offers, a $1.5 million cash offer with no contingencies and a 10-day closing timeline. The second offer is a $1.3 million finance offer with contingencies, including an appraisal and a 30-day close. First of all, the prudent action here is to see how much higher the cash buyer can go, because at the end of the day, that $100,000 is a lot of money. If the cash buyer stays at $1.2 million, most sellers should choose the cash offer because it eliminates the risk of the deal falling apart and it ensures a fast, smooth transaction. The slightly lower price is outweighed by the security and speed. Cash buyers are simply the low-risk, high-reward option for sellers, making them incredibly powerful in our competitive market. Now, FHA buyers, even if you're not competing with cash buyers and are instead up against buyers with conventional loans, the playing field still isn't in your favor. Let's break down the key differences between an FHA and conventional loans, and you'll see why sellers often prefer offers backed by conventional financing. The first one, down payment requirements. I've already mentioned that FHA loans allow as little as 3.5% down, which is great for first-time buyers with limited savings. Conventional loans can also go as low as 3% down for first-time buyers, but typically require 5 to 20% down for most buyers. Here's where the disadvantage comes for FHA buyers. Sellers often view a higher down payment from a conventional buyer as a sign of financial stability. The second, credit score requirements. FHA loans are designed for borrowers with lower credit scores, with the minimum score of 580 for a 3.5% down payment option. Conventional loans typically require a credit score of 620 or higher to qualify, and buyers with scores above 700 are rewarded with better rates. Sellers know that conventional buyers often have high credit scores, which reassures them that the deal is less likely to fall apart due to financing issues. Number 3, loan limits. For high-cost counties like Alameda, Contra Costa, San Francisco, San Mateo, and Santa Clara, the 2024 FHA loan limit for a single-family home is $1.1 million. While that might seem generous, the average detached single-family home in the Bay Area costs $1.6 million, right? Conventional loans, these same high-cost counties have the same limit of 1.1, but here's the key difference. Buyers needing higher amounts can use a jumbo loan, which isn't an option with an FHA financing. Number 4, property requirements. FHA loans come with stricter appraisal and inspection requirements, which can flag issues that sellers might not want to deal with. For instance, the property must meet certain safety and habitability standards. Conventional loans, on the other hand, are much more flexible and less likely to result in delays due to appraisal or repair demands. Number 5, seller perception. In a competitive market like the Bay Area, sellers often view FHA offers as weaker due to these stricter requirements and the perception that FHA buyers are less financially stable. Conventional buyers, especially those with larger down payments, are seen as more reliable and attractive. Let's put this into perspective. Imagine again a seller receives 2 offers. An FHA offer for $1.2 million with a 3.5% down payment and contingencies for financing, appraisal, and inspection. Second offer, a conventional offer for $1.2 with 20% down payment and no contingencies for financing or appraisal. Even though the price is the same, the seller will most likely choose the conventional offer because, again, there's less risk of the deal falling apart. The appraisal isn't likely to become an issue. They know the buyer has more skin in the game with a larger down payment. So here's the takeaway. If you're a buyer relying on an FHA loan in the Bay Area, it's not impossible to purchase a home, but you're at a disadvantage. FHA loans are better suited for less competitive markets with lower home prices. Here in the Bay, if you can strengthen your offer with a larger down payment or qualify for a conventional loan, you'll be in much better position to compete. If you're a first-time home buyer or struggling to compete, let's talk. Drop your questions in the comments or check the description for free resources that can help you navigate this challenging market.